But maybe I don't want to look at the total adding up the periods, but rather I want to compare one period to the other looking at the difference, which is quite common when looking at comparative performance reports, right? I want to see, how did I do last time? How did I do this time? What's the difference between the two? So in that case, I'm going to set the range toward the later time period and then use this feature in order to look at the previous period, which, if they switch to modern mode, you will recall will be switched to modern mode over here. And when we're in the modern mode, we have our comparative items up top. So we have the previous year, the previous period, and so on. So this is going to be the same kind of layout. And here's the percentages. I'll try to go back and forth in the event that QuickBooks switches to one or the other permanently, but they're still in testing mode, it looks like, at this time between the two. So let's go back to the classic mode. And then what I'll do is, let's say that we want to compare 2025, the entire year. Well, let's do the last month, December compared to November. So what I'm going to do is then go from the 12/01/25. Let's do it 24, 12/01/24 to 12/31/24. So now I've got the time range for that month. I'm going to go back to the totals, run it. So this would be for the month of 12/31/2024, month ended 12/31/2024, and then I can compare it possibly to the previous period, which is going to be 11/1 through 11/30, remembering that it's a kind of a wonky comparison, or kind of a not perfect comparison when we compare month over month because of the difference in the days. So you could try to make a perfect comparison by adjusting, December to 30 days or something like that. But usually we compare the full month to the full month, which is a little off in terms of a perfect comparison because we don't have an equal number of days in each month, but that is what it is. So if I run that, we have the comparison down here. Notice what it does. It puts now the current period, the latest period up front, which makes sense from a comparison standpoint like this, because typically that's the most important period. So we put it up front and then the older period on the side, the next side to the right. When we read it from left to right, we read the most important or newest to the later or less important. And then we can subtract the two, since we only have two periods now. So I can do that by selecting the drop down, look at the dollar change, and then I'm also going to add the percentage change. So let's go ahead and run that. So now you've got December minus the November. It gives me the dollar change, and then we have the percentage change, noting the dollar change is great for our purposes as we make comparisons to how we did from a dollar standpoint change from this period to last period and so on. And we can look at our prior performance. But I can't compare that as easily to other businesses that I'm trying to benchmark to, because most likely if I was like a burger shop and I'm trying to compare to McDonald's, for example, I can't compare the dollars. But I want to benchmark possibly, say, to McDonald's because I know that's they have an efficient system. So I'm trying to learn from them but I can't compare dollars to dollars. Well, we can compare ratios. That's where the ratios come in. Anytime we're making a comparison of performance, which happens in job, when we're trying to analyze a job, if we're actually trying to look at performance, we're going to have to use ratios oftentimes in order to do that, to equalize the differences. So we're going to say, all right, if I took then the 360, for example, minus the 400 on this one, that gives us a negative 40. How do we then calculate the percent? We take the change in total dollar amount divided by the prior period, not the current period, the prior period. So divided by 400. And if we move the decimal 2 places over, that's going to give us our 10%. So these percent changes, we might be able to compare then if we were a small burger shop to, say, McDonald's, for example, and see if we can make those comparisons. And then now notice, of course, that the dates up top might need to change. So now we have December 31st, but really that we might keep that, but really we have two dates that are comparison. We might want to change the name from profit and loss to a profit and loss horizontal analysis, for example. Before we do that, however, let's take a look at some other options. We can also, by the way, before I do that, let's switch back to the modern view, So here we have it. And if I go into the compare, here's where the previous month is. And then down here, we have the dollar change and the percent change. So instead of having them listed out with each of these options, it's a little bit more efficient this way. So we'll see if they keep that. But let's close that out and switch back to the classic view, because we like to be classic over here, although I'm cool with the modern view if they want to keep that. And so then we're going to go previous year. Let's compare to the previous year and do a dollar change and a percent change, and then run that one. So now it's looking at December 2024 compared to December of 2023. This might be better if I did this for 2025, because that's where the data is. So I'm looking at the range December 1st through December 31st of 2025. And now I want to look at the same period from the last year. So it's looking at December 2025. There's no data in it, compared to December of 2024. So that makes sense. So if we're doing our income statement, we might want to have multiple periods and then add them up for the total, or we might want to have two periods and then subtract them. If we subtract them, we might want to compare the current period to the prior period, whether that be month, quarter, or year, or we might want to compare the current time frame to the same time frame in the prior year, such as the current month compared to the prior month, and last year, same month last year, the current quarter compared to the same quarter last year, the current, and so on. So that's going to be the idea. So let's go ahead and hit the drop down here again, and let's just see that in the switch to modern mode. Switch to modern mode. See where that would be located in the comparisons. So previous year, and so here we have those two comparisons. So you can see that I'm going to go back to the classic mode. If we do all of these comparisons, then there's a lot of different formats or types of reports, and there's more as the year goes by. In other words, if you're doing bookkeeping for January, you can compare January to last January to the prior year's January, and so on. But you don't have a lot to compare in the current period. Whereas if you're running a report for December of the year, then you can compare December of this year compared to December of last year. You can compare December of this year compared to November of this year. You can do a report that breaks out all the months, all 12 months, and then gives you the total for the year if you wanted to. You can do a quarterly report that gives you all 4 quarters and the total for the year if you wanted to. You can do a report that has the quarter of the current year compared to the prior quarter of the current year, or the quarter of the current year compared to the last year same quarter, and so on and so forth. So you can see you end up with a whole lot of different variants just in terms of the comparative types of reports. Now that we look at the income statement, you have a similar group of comparisons, a whole lot of reports that you could generate with the balance sheet reports. That means that when you're grouping the reports at like month end, there's almost an endless number of reports. So you want to be thinking about what are the most relevant type of reports you can put together, noting that when you look at these comparative reports, for example, if I did the report over here where it's going to show multiple quarters or months and then give you the total, then it's actually giving you the total information for the period. So your question is, do I want to have a simple income statement and then also one that compares multiple months? Or do I want to have a more complex income statement that compares all multiple months and gives the total, not including a simple income statement, because it would be redundant? So you have this issue of how many reports you want to generate, how much redundant information do you want to have in order to show a simple report versus a more complex report, and so on and so forth, which we might talk about more in future presentations. So let's go back here to the prior one. Let's go to the previous period, and let's do it this way, and then run it. And then let's do, let's go for 2024. Back to 2024. Back to 2024. Run it. Okay. So then let's do some customization. Let's customize this thing. So now we might say, if I was going to give this externally, I might remove the pennies, and I might then select the drop down and make the negative numbers 0 and show them as red possibly. And then on the headers and footers, maybe I get rid of the date time report paces. And then maybe I don't want to call it a profit and loss. Maybe I call it an income statement just to switch it up, and then maybe horizontal analysis. And I possibly would want to say for months versus years, because I could make horizontal analysis for, so I could say current months instead of comparing this month to last month or quarter to quarter. And then we can run it and we can see what our performance is. We've had a pretty good performance, even though we've had some theftery. We're in California. We've had wildfires over here, theftery, but we're still, well, actually we've got a change over here on the downside. So, you know, it's been kind of rough over here. I called my klepto neighbor a thief. And can you believe the guy took offense to it? He took offense to be calling a thief because he's a klepto, which is really annoying that he took offense to it because now my dog keeps running away. So I warn you, if you call a klepto, they may take offense. Literally. You know, next time my dog runs away, I hope it craps on his lawn. Because if you take offense, then my free-range dog takes a crap on your lawn. That's how, anyway, I don't know where I went with that. So what am I doing over here? So now we're going to, I could save the customization, and then we can go, this is going to be 1, and then I'll put this into month-end reports, and then we'll add that, and then boom. So we'll save that there. And then of course we can save that customization by going to the first tab, and we go into the custom reports, run it. And so now we can save the customization. Boom. Looks muy B to the N. And so we'll continue in on the next time.